What the research shows, and this is what I've seen in the various companies I've been involved in and the range of commodities I've worked in, and I've worked in most. If you can operate in the bottom half of the cost curve, and I'm talking about the cash operating cost curve after taking into account normal capital development, then you can usually perform through the cycle and generate cash through the cycle. And if you can do that, it generally helps you maintain a focus on creating the most value through the cycle, because you're not making short-term decisions to cover a weakness in cash flow. And that's really important, because the decisions, short-term decisions people make on deposits, are usually value destructive if they're not able to pay their debts as and when they fall due. So that's really important. And for me, in making a decision to join companies, I've always been cognizant of the view that asset be managed through the cycle depending on the market, and that's been an important consideration for me, and it's turned out generally to be a pretty good rule. Second point is, if you can do that, there's an inherent flexibility in the ore body. So grades are different, or they've got different characteristics that can be viewed at different price cycles in the market, so that when prices are high, if you're able to flex your business and push more volume out to satisfy the market, and then manage with a lower volume but with a lower cost base when the prices are low, your ability to average a price 10 to 15 to 20% above the average price through the cycle puts you, in my experience, the top quartile performers in the industry. So the ability to be inherently flexible around the nature of the ore body, your mining strategies, and the markets you service is a recipe to outperform the market. And what I've said there is a lot in terms of how you think about structuring your business and the markets you play in, but it's the key to outperforming your competitors in the market, and it's one that's not well understood, and certainly not as broadly across the industry